Money FM 89.3. Best of breakfast. Companies to watch.
All right, companies to watch, and we've got a bank in focus today, and to help us navigate what to look out for, we've got Dan Koh. Good morning, Dan.
Good morning, Ryan. Yes, another big bang to cover or uncover today. Welcome to Companies to Watch. That's a segment where we spotlight and stock you up with ideas that will call for your attention. So we're looking at market trends and risks and hidden gems and warning signs to steer clear of. So be part of the conversation as well. 88550893. WhatsApp us and tell us whether you think it's going to be a hot or not. Okay, Ryan, you ready?
Let's go.
Ryan, what's big, what's blue, and has a lot of money?
Papa Smurf.
Huh? Does he have a lot of money?
I think so. He's been around for a while.
Papa Smurf, okay. It's wrong. It's UOB, right?
Okay. I should have known.
Yes, okay. UOB, that's rated as the world's top banks, ranked AA1 by Moody's Investors Service and AA- by both S&P Global as well as Fitch Ratings, with a global network of 500 branches and offices across 19 countries in Asia Pacific, Europe, and North America. So, tons of good stuff for UOB right there, and it doesn't stop here because it just reported its earnings result with a net profit of $1.52 billion for the fourth quarter ended December. That's up 8.6% from the $1.4 billion in the previous corresponding period, also beating consensus forecasts by a significant margin. So, lots of numbers to break down here, Ryan. I'll try to make this as digestible as possible. This included a $17 million in one-off expenses from the lender's Citigroup integration costs after taxes. Now, you remember that they integrated Citigroup a couple of years back, right? Mm-hmm. So, just this year, they completed, I believe, their Thailand one. And they've also completed Indonesia and Malaysia. And I think they're working on to integrating Vietnam's office, if I'm not wrong, by this year, if not to 2026. So that's one to watch out for UOB. As for income lovers, you're going to love this one. The lender has proposed a higher final dividend of 92 cents per share for the half-year period from 85 cents the year before. So this entirely brings the full-year dividend to $1.80 per share and represents a payout ratio of about 50%. On top of that, they've got a bonus as well. It's proposing a special dividend of 50 cents per share, paying out $800 million of UOB's surplus capital over two tranches this year. So it will be given out in a special dividend of 25 cents that will be paid out on May 13th, and the remaining will be issued on August 28th. How does it sound like to you, Ryan?
Yeah, it's a reflection of its strong capital position. Pretty much just like DBS, they've got enough cash to return to shareholders and reward them. So good news for potentially stock as well.
Yep. So all of it has been rather rosy and green for them, but I gotta say, there's this one portion that's a little bit concerning, and it has to be its net interest margin for the fourth quarter, which stood at 2%, down from 2.02% in the same period a year earlier. And they actually attributed this mainly due to lower benchmark rates. But overall, for the full year, net profit was up 5.8%. Excluding, their one-off Citigroup integration costs, core net profit will be at about $6.23 billion. And a lot of this growth has been attributed to their net income or net interest income, which was relatively stable for the year, driven by healthy loan growth and, of course, offsetting the effects of lower net interest margin. That being said, though, according to the bank's Deputy Chairman and Chief Executive Wee Ee Cheong, the group's net profit, he feels, was driven by a strong set of fee income as well as robust trading and investment income, and he expects continued revenue growth by this year and moving forward as well. So he is confident that the ASEAN region will continue to remain resilient even in the face of Trump's administration, supported by a higher domestic retail spending and a stronger influx of foreign direct investment. So that being said, considering the bank's capital distribution strategy, the return of $3 billion to shareholders over the next 3 years through special dividends, as well as a $2 billion share buyback, that really does sound quite appealing for UOB. What do you make of the results so far?
Going by most metrics, you do have UOB looking quite positive. You did note that we have some headwinds on the margins, but quite expected with the industry-wide cut in rates. So the upside on that is you have loans growth looking healthy, which is offsetting that effect.
Yeah.
So all in, you do have a pretty good quarter.
Yeah, certainly a fantastic quarter for them right here. So the lender also noted that, the capital position will remain strong following the capital distribution. And of course, they're confident that they're able to enhance shareholder value in the years to come. So that's certainly one to watch. But for now, UOB does seem like a really, really strong heart for me. What about you, Ryan?
Yeah, same. And of course, they've got an eye on all these partnerships with concert event holders or organizers. They were in the equation with Taylor Swift promoting it and attracting new credit card signups and fees along the way.
That's right.
So I'm expecting them to follow that playbook for the coming year. And it does look like, things are going well.
Certainly quite well for them. For the year to date, as of the 20th of February, UOB's shares are currently up more than 5% at $38.50. And according to, the various consensus ratings, they're all giving it a strong buy for UOB. And that pretty much wraps it for our analysis of today's Stock in Focus, UOB. Ryan, what was UOB's original name? Do you know what it's called first?
United Overseas Bank.
Oh, very good. Okay, what is its original name?
That's a tough one. I know they merged or acquired OUB a while ago, and then along the way there were a few acquisitions. So I can't remember.
Okay, the very beginning, right? From the very beginning, originally it is called United Chinese Bank. It was established to serve the banking needs of the Chinese community in Singapore. And then they realized they had more international presence, so that's why they changed it to United Overseas Bank. That being said, why did the banker break up, Ryan?
Why did a banker break up?
Yeah.
Why?
He lost interest.
Okay.
And that's all we have for UOB.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.